Illustration. Book value per share. The shareholders' equity of Paliling Corporation on December 31, 2021 shows the following balances. So preference share, 12%, 100 pesos par, and na ay 8,000 shares. So nasa 800,000 pesos. Then subscribe preference share, 200,000 pesos. Subscriptions receivable preference share, 50,000. Ordinary share, 4,100,000. And treasury shares ordinary, 150,000. Share premium, 2 million. And accumulated profits nga na 4 million. So dividends have been paid on the preference share up to December 31, 2019. So required kay determine the amount of book value per share of ordinary share and preference share under each of the following conditions with respect to preference shares. So mag-compute sa number of shares outstanding in the total par or stated value of outstanding shares for each class of stock. So sa preference shares, na ay preference share capital issued katong 8,000 nga shares, then i-times nimo sa 100 pesos, diba? So na 800,000 pesos ang total par value. Next is i-add nimo sa subscribe preference shares na ay 2K nga shares, then 200,000 nga par value. I-total ang shares 8K plus 2K na ay 10K shares. Then sa par value po, 800,000 o 200,000 equals 1 million. Then kay what may treasury shares at par, i-bring down na ra ang kaning shares. Muna na siya ang shares outstanding and total par value sa preference shares. Next kay ang ordinary shares. So ordinary share capital issued itong 41,000 nga shares, then na ay total par value nga 4,100,000. Then add sa subscribed ordinary shares total bring down 41,000 o 4,100,000. Then less sa treasury shares at par na may treasury dito katong sa ordinary, then na ay 1K ang shares, then sa par value na ay 100,000 pesos. So, shares outstanding ang total par value, 41 plus 1. 41 minus kay less man. 41 minus 1,000 is na 40,000. Then, sa par value na 4,100,000 i-minus 100,000. So, na may 4 million pesos. Step 2 na ang sa compute for the total shareholders equity na pod, excluding any subscriptions receivable. So, first, preference share, katong 800,000. Then subscribe preference share 200,000. Ordinary share nga 4,100,000. Then i-minus ang kaning treasury shares ordinary nga 150,000. Share premium nga 2 million, accumulated profits nga 4 million. So total tanan na ay 10,950,000. Wala dyan ang total shareholders equity. Ari na ta sa requirement number 1, non-cumulative and non-participating. So step 3, compute for the preference shareholders equity using the following formula. So par value of preference shares equity na ay 1 million. Kaning diri sa babaw. Kana add preference dividends katong 1 million times katong 12% nga kani 12% times 1 year. So, na ay 120,000. May liquidation premium. So, 1 million plus 120,000 equals 1,120,000 pesos. Muna ang total preference shareholders equity. Step 4. Using residual entity approach, compute for the total ordinary shareholders equity by deducting the preference shareholders equity from the total shareholders equity. So, total shareholders equity kay di ba kani 10,150,000 mo ni. Then less sa preference shareholders equity katong kani bago pa ito na solve. Then total ordinary shareholders equity. Then minus na ang 10,950,000 sa 1,120,000. And muna ni ang total ordinary shareholders equity kaning 9,830,000. Step 5. Compute for the book value per share of the preference shares and ordinary shares. So, total preference shareholders equity na ay kani 1,120,000. Then, divided by sa outstanding shares niya. Diba ang outstanding shares sa preference shares kay 10K? So, mao to. I-divide ang 1,120,000 sa 10K nga shares. Then, equals sa 112 pesos. Wala book value per share, preference shares. Next, arin na ta sa total ordinary shareholders equity. So, na ay 9,830,000 katong compute na to pag step 4. Then, i-divide sa outstanding shares. Katong, diba, na ay 40,000 nga outstanding shares. Then divide 9,830,000 divided by 40,000 na ay 245.75 pesos. Amo na ang book value per share sa ordinary shares. So naasa tay alternative solution. Step 1, compute for the number of shares outstanding, total par or stated value of outstanding shares for each class of stock. So naka-compute naman tadaan nga ni pag katong sa shares outstanding mana na-compute tataan ni. So next, step 2, compute for the excess over par using this formula. So ang total shareholders equity nga 10,950,000 muna nakuha na to sa step 2. Then less kuno sa par value sa outstanding preference shares, itong 1 million. Then, next is sa ordinary share na po na par value na ay 4 million. Then, 10,950,000 minus 1 million, 4 million na ay 5,950,000 nga excess over par. Next is ang step 3. Use the following step in computing for the book value per share. So, na excess over par dire katong excess over par nga 5,950,000 balances, preference share nga 1 million, then ordinary shares nga 4 million. So, preference dividends na 1 million times 12%. Itong given na ni ganina times katong 1 year. Itong 120,000 minus dire sa excess over par, then dire sa preference share. Mao na laman ni ang balance to ordinary shares ang kaning 5,830,000. Then dire pod sa ordinary shares. Next kay ang total shareholders equity na laman kay ang total shareholders equity ang preference share na 1 million plus 120 na ay 1,120,000 na ani kanina katong preference shareholders. Then ang katong ordinary shares nga 4 million o 5 million ang balance ng ordinary shares nga 5,830,000 na ay 9,830,000. Napot to kanina sa step 4. Mo ni ang alternative nga solution. Then ang kani katong bag-uhay pa nato i-compute sa step 5. Katong outstanding shares nga 10K sa preference shares, then naapoy outstanding shares sa ordinary shares nga 40K. So ang book value per share nga na i-divide ni sila na ay 112 pesos, then sa ordinary shares na ay 245.75 pesos katong kani. Sa requirement number 2 ta, cumulative and non-participating. Step 1 and step 2 are similar with computation requirement number 1. So step 3, compute for the preference shareholders equity using the following formula. And the par value preference shareholders equity katong 1 million. Given na ba dyan eh? Then add sa preference dividends nga 1 million times 12% times 2 years na siya. So, na ay 240,000. liquidation premium wa. So, ang total preferred shareholders equity, 1,240,000 pesos. Plus ni sila. Step 4, using residual entity approach, compute for the total ordinary shareholders equity by deducting the preference shareholders equity from the total shareholders equity. So, ang total shareholders equity kay na ay 10,950,000 total shareholders equity, then ilas sa preference shareholders equity nga kani 1,240,000. So total ordinary shareholders equity 9,710,000. Step 5, compute for the book value per share for the preference shares and ordinary shares. So total preference shareholders equity katong 1,240,000, then ay outstanding shares divided by outstanding shares nga 10k. Then ang book value per share sa preference shares is naanay 124 pesos. Total ordinary shareholders equity 9,710,000, then divided by outstanding shares nga 40k. Then book value per share or sa ordinary shares na ay 242.75 pesos. So alternative solution. Step 1 and Step 2 are similar with computation in requirement 1 for alternative solution portion. Step 3, use the following table in computing for the book value per share. So parehara kapon sa alternative solution pag requirement 1. So excess over par na 5,950,000 ang balances. Preference share nga 1 million, ordinary shares nga 4 million. So kay 2 years naman siya. So minus 240,000 excess par, then preference shares. Kauman, minus, then mao na niyang balance ordinary shares. Ang 5,710,000. Mao po dibutang diri as ordinary shares. Then, total shareholders equity sa preference shares, mao ni 1,240,000. Then, sa ordinary shares na ay 9,710,000. Then, divide yapon sa outstanding shares nga 10,000, 40,000. Motong 124 katong kani. Then, 242.75 pesos ang book value per share. So, sa requirement number 3, cumulative and fully participating. So, steps 1 and 2 are similar with computation requirement number 1. Step 3, compute for the preference shareholders equity using the following formula. So, par value of preference shareholders equity kay na ay 1 million. Then, add sa preference dividends nga na ay 1 million times katong 12%. Then, 2 years na ay 40,000 while liquidation premium. Next is amount of participation of preference shares. Ang kaning 1,046,000 kuha ni siya sa katong mao ni ang ijang kanang computed sa amount of participation for preference shares. So kuan ang katong total shareholders equity nga na 10,950,000. Then last sa par value sa preference shares 1 million. Par value sa ordinary shares, the preference dividends ng kani, ordinary shares dividends nga katong 4 million nga ordinary shares, then ang katong 12% times 1 year. So, na 480,000. Muna siya ang balance for participation. So, before participation, the ordinary share shall receive first an amount equal to the total par or state value of the ordinary share multiplied by the rate of the preference shares. Lowest rate if there are 2 or more preference shares. So, ang preference shares na ay par value of outstanding shares nga 1 million. Then, ang iyang fraction kay 1.5. So, para makuha ning 1,046,000, ang katong kaning balance for participation nga balance nga participation nga 5,230,000 i-times sa katong fraction nga 1/5 na ay 1,046,000. Maura pod na siya sa ordinary share nga ang katong 5,230,000 i-times sa ang fraction diri kay 4/5. So it times siya sa 4/5 equals 4,184,000. Ja, motong i-plus ang amount of participation sa preference shares o ordinary shares mo niya ang katong balance. Katong balance for participation. Next, step 4. Using residual entity approach, compute for the total ordinary shareholders equity by deducting the preference shareholders equity from the total shareholders equity. So, na-total naman siya ang total shareholders equity ganina, no? Mo ni 10,950,000. Then, less sa preference shareholders equity nga 2,286,000. Mao ni ang katong dire. Katong gi-compute nato sa step 3. Mao ni siya i-less dire sa step 4. Then, mao ni niya ang total ordinary shareholders equity. 8,664,000 pesos. Step 5. Compute for the book value per share of the preference shares and ordinary shares. So, total preference shareholders equity, 2,286,000 na sa step 3. Divided by outstanding shares nga katong 10,000. 10,000 ja book value per share sa preference shares i-divide ni na kay makuha nga 228.6 pesos. Then maura pod na sa total ordinary shareholders equity nga kani sa step 4 8,664,000 i-divide siya sa outstanding shares na 40 sa outstanding shares sa ordinary shares. So, i-divide na siya then na ay 216.6 pesos. Then, sa alternative solution, mara gyapon ang computation sa step 1 ug 2 for sa alternative solution portion. Using the following table, computing for the book value per share. So, mato balances, diba katong 5,950,000 ang sa excess over par. Then, mara gyapon preference share nga 1 million or ordinary share nga 4 million. So, the preference share dividend 1 million katong 1 million times 12% times 2 years na ay sa par nga 240 minus na siya 240 then ikuan diri i-add sa preference share. Ang ordinary shares dividends na pod katong 4 million times 12% times 1 year. I-less ni siya sa excess over par then add siya sa ordinary shares. So, 5,950,000 minus 240,000 o 480,000 na ay 5,230,000 sa balance for participation. Ja, ang katong PS, katong preference share nga, katong fraction nga, i-times sa 1/5 fraction times siya sa kaning balance for participation. So, morning katong sa step 3. Step 3 nga katong amount of participation of preference share. Minus siya sa excess over par. Then, i-add siya sa preference shares. Yung maura pud sa ordinary share nga times 4/5 times 5,230,000. Then, money siya sa excess over par. Less ni siya then money siya ang sa balance. balance for participation. Diya ang amount of participation for ordinary share. Then, diri pod sa mo ning i-add po diri sa ordinary shares. 480,000 sa ordinary shares i-add ani. So mo tunay 8,664,000. Then ang kaning preference shares na 1 million to 40,000 og kaning amount of participation of preference share nga 1,046,000 over na ay 2,286,000. Then ang sa total shareholders ay i-divide siya sa outstanding shares. So ang outstanding shares sa preference shares kay diba 10 million, ang sa ordinary shares kay ang outstanding shares sa preference shares kay 10,000, then sa ordinary shares kay 40,000. So matong book value per share para ra kani pero alternative naman siya mo minubo na niya like diretso na ni siya. So na 228.6 pesos. Then sa ordinary shares na ay 216.6 pesos. Requirement number 4, cumulative and participating up to 18%. Mura gyapon step 1, step 2 similar gyapon sa requirement number 1. Step 3, compute for the preference shareholders equity using the formula. So, ang kaning 60,000 nakuha ni siya sa kaning 18% ng katong participating up to 18% siya. Minus sa katong 12% ng katong usa. Then, di ba 18 minus 6 is na may 6%. Then, 6%, 1 million times 6% na ay 60. So, muna dyan ang amount of participation of preference share. Mura gihapon, shareholders equity nga 1 million. Preference dividends nga kani mura gyapon to 40. Then while liquidation premium jamo to ang amount of participation of preference share nga 60. So total preference shareholders equity na ay 1,300,000. Mura gyapon siya. Then step 4, using residual entity approach, compute for the total ordinary shares equity by deducting the preference shareholders equity from the total shareholders equity. So margyapon total shareholders equity nga 10,950,000 less sa preference shareholders equity nga kani 1,300,000, then na ay total shareholders equity nga 9,650,000. So compute for the book value na punta. So total preference shareholders equity na ay 1,300,000, then mura gyapon outstanding shares divided by 10,000. Book value na ay 130 pesos. Then mura gyapon sa ordinary shareholders equity kani 9,650,000. Outstanding shares ordinary 40,000. Then i-divide 241.25 pesos. Sa alternative solution, mura gyapon style, mura gyapon excess over par 5,950,000. Preference share 1 million, ordinary share 4 million. Mura gyapon 240 nga preference dividends add dire, then ordinary shares dividends na pod less dire excess over par add dire sa ordinary shares. Balance for participation 5,230,000. Then mo na ning katong 60,000 nga amount of participation of preference share add dire sa preference share. Iyang 5 ang sa balance to ordinary share less ang 5 million sa 60,000. Mao ay 5,170,000. Da i-add po diri sa ordinary share. Mao ning i-add ni silang tulo na ay 9,650,000. Ug i-add po ni sila na ay 1,300,000. The outstanding shares sa preference share 10,000 o 40,000 sa ordinary. Mao to'y book value nga 130 pesos og sa preference share og 241.25 pesos sa ordinary shares. Last kay ang requirement number 5, cumulative and non-participating Non-participating. The preference share has a liquidation value of 110 per share, so naay liquidation premium na. Mora gyapon step 1, step 2 computation sa requirement number 1. So step 3, compute for the preference shareholders equity using the following formula. So par value mora gyapon 1 million, preference dividends 240,000. Ang liquidation premium kay mao ni ang katong kani given kaning per share. Liquidation value 110 i-minus sa katong 100 pesos par 8,000 shares na ani sa katong given. I-times sa 10K nga outstanding shares sa preference shareholder. Sa preference shares. Then, motong na ay 100,000 nga liquidation premium. Total preference shareholders add tanan na ay 1,340,000. Next, step 4, using residual entity approach, compute for the total ordinary shareholders equity by deducting the preference shareholders equity from the total shareholders equity. Mora gihapon katong 10,950,000 less sa preference shareholders equity katong kani sa step 3. Then ay total ordinary shareholders equity nga 9,610,000. Step 5, compute for the book value per share of the preference shares and ordinary shares. Then total preference shareholders equity katong kanina sa nanay 1,340,000 dya ang outstanding shares 10 million. So, i-divide na ay 134 pesos nga book value per share sa preference shares. Next, ordinary shareholders na pod na ay kani 9,610,000 dya mora gyapon outstanding shares. Divide na ay 240.25 pesos ng book value per share sa preference shares. Ang ordinary na ni. Ang alternative solution mora gyapon ng step 1 o step 2 parehara. Then sa step 3, use the following table. Mora gyapon excess over par, preference shares o 4 million sa ordinary shares. Mora ang preference dividends, may less diri sa excess over par, add sa preference shares. Then 100,000 may less diri sa excess over par and add preference shares. Minus ang 5,950,000 i-minus sa 240 o 100. Then, money ang balance ordinary shares. And money i-add po na dyan diri sa ordinary shares. Add ni tanan ay 1,340,000. Add po ni na ay 9,610,000. Murag po ng katong outstanding shares sa duha, 10,000 o 40,000. Motong book value per share sa preference shares na ay 134 pesos. Just sa ordinary share na ay 240.25 pesos.
So good day everyone, I'm Shania Mihort and I'm gonna continue the report. So adding na task requirement number 5, which is the cumulative and non-participating. The preference share has a liquidation value of 110 pesos per share. So ang step 1 o step 2 ingani kay similar naman siya sa computation sa requirement number 1, maong mulargon halaman ta sa step 3. So, naatay compute for the preference shareholders equity using the following formula. So, natay par value of the preference shareholders equity na 1 million. Ato siyang i-add sa preference dividends o sa liquidation premium. So, pagkuha sa 240,000 na preference dividends, ato lang multiply ag 1 million times 12% times 2 years. That's why we have 240,000. Sa liquidation premium pod, ato na pong minus ag 110,000 sa 110 pesos sa 100 pesos. Then after atong gi-multiply og 10, 110 minus 100 natay 10. 10 times 100, 10 times 10,000 so natay 100,000. So atong total preference shareholders equity is 1,340,000. Then, ari na ta sa step 4. Ang step 4, kay using residual entity approach, compute for the total ordinary shareholders' equity by deducting the preferred shareholders' equity from the total shareholders' equity. So, atong total shareholders' equity ko no, ato na ko nung i-minus sa preference shareholders' equity. So, the total shareholders' equity kay natay 10,950,000. So, atong i-less sa preference shareholders' equity na 1,340,000. Ari nagikan na total shareholders' equity kato atong gi-compute sa step 3. So, 10,950,000 minus 1,340,000 natay total ordinary shareholders equity na 9,610,000. Then sa step 5 is compute for the book value per share of the preference shares and the ordinary shares. So magsugod tas total preference shareholders equity na 1,340,000. Ato kuno sayang i-divide sa outstanding shares na 10,000. So natay book value per share preference shares na 134 pesos. Unja, the next is total ordinary shareholders equity na pod na 9,610,000. Ato na po siya i-divide sa outstanding shares na 40,000. So natay book value per share preference shares na 240.25. So aside sa atong gibuhat ganina, na ako daytay alternative solution. So using the following table and computing for the book value per share. So natay balances sa excess over par, preference shares of ordinary shares. Sa excess over par natay balance na 5,950,000. Sa preference shares natay balance na 1 million o sa ordinary shares natay balance na 4 million. So ang preference dividends na atay negative 240,000, sa excess over par og natay preference shares na 240,000. Sa liquidation premium na atay excess over par na negative 100,000 o preference shares na 100,000. So ang balance to ordinary shares nato sa excess over par na atay 5,610,000. So ato na nang i-direct sa ordinary shares, ato na siyang butang pod aray na 5,610,000. So atong total shareholders equity mauning 1,340,000. Kani 1 million plus 240, 1,240 plus 100,000, 1,340,000. Unja kaning ordinary shares 4 million plus 5,610,000. Dapat ay total shareholders equity sa ordinary shares na 9,610,000. So natay outstanding shares na sa preference shares na 10,000. Sa ordinary shares natay outstanding shares na 40,000. So, ato na silang i-divide. 1,340,000 na total shareholders equity atong i-divide sa outstanding shares na 10,000 mao nang naatay book value per share na 134 pesos. Same as sa ordinary shares na atay total shareholders equity na 9,610,000 ato siyang i-divide sa outstanding shares na 40,000, so natay book value per share na 240.25 pesos. So for the illustration, weighted average with bonus issue, on January 1, Miss Universe Company had 100,000 issued and outstanding ordinary shares. The entity had the following transaction during the year. March 1 issued 24,000 ordinary shares, April 1 declared 10% bonus issue, June 1 required 9,000 ordinary shares to be held in treasury, and October 1 reissued 4,500 treasury shares. So, we are required to determine the weighted average ordinary shares to be used in computing for the earnings per share. So, dire, dapat natong hibaon ang weighted average ordinary shares para magamit inig-compute sa earnings per share. So, for the solution, magsugod ta sa January 1. Natay 100,000 ato na sila i-multiply sa 110%. So, natay outstanding shares na 110,000. So, as in March 1, 124,000 times 110%, natay 136,000. Then, in June 1, at atong 136,400, ato na silang gimaynusan sa reacquired na ordinary share na 9,000. So, naatay 127,000. Then, October 1, atong 127,400, ato po na silang i-plus sa 4,500 na reissue treasury shares. Ato po na siya total natay 374,800. So, ang months unchanged natay sa January 1, 2 months. Sa March 1, 3 months. So, aga na March 1, dito ko ani January, February, March, 3 months, ani ka masulog help. March, then June 1 again, then October 1, 3. So, sa kuha na to sa average, ang atong outstanding shares, ato ra sidyang i-multiply sa atong months and change. So, 110,000 times 2 na atay 220,000, 136,000 times 3, 409,200, 127,000 times 4 na atay 409,600, and 131,900 times 3 na atay 395,700. For the total average na atay 1,534,875. So, para makuha na itong weighted average outstanding shares, ato silang i-divide sa 12 months. So, 1,534,875 divided by 12, natay weighted average outstanding share na 127,875. So next illustration is for the weighted average share split. On January 1, the current year, Julius Company had 130,000 issued ordinary shares, but only 120,000 shares are outstanding. The entity had the following transaction during the year. On March 1, issued 15,000 ordinary shares. On April 1, reissued 5,000 of treasury shares. And on June 1, completed a 2-for-1 share split for the ordinary shares. And October 1, reissued 4,500 treasury shares. We are required to determine the weighted average ordinary shares to be used in computing for the earnings per share. So for the solution, magsugod ta sa January 1. Actually, 130,000 ang i-issued na ko ordinary shares, but 120,000 rin kay maura may outstanding share. So 120,000 times 2 divided by 1 na atay outstanding share na 240,000. Ini ka March 1 pod 135,000 times 2 divided by 1 equals 270,000 na outstanding shares. Then, ini ka April 1, kaning 135,000, ato ning i-minus of 5K na reissued of the treasury shares. Then, after times 2 divided by 1, natay 280,000. Ika October 1 pod, atong 280,000, ato po siyang i-add of 4,500. So, agay 4,500 kung ani reissued treasury shares. So, atong outstanding share is 284,000. So, naatay total na 785,000. Then, for the months unchanged, we have sa January 2, sa March 1, sa April 6, sa October 3. For the average, kaning because average outstanding shares ato ra sidyang i-multiply sa months and change. So for the January 1, 240,000 times 2, 480,000, 270,000 times 1, 270,000, 280,000 times 6, 1,680,000, and 284,000 times 3, 853,500. So naatay total average of 3,283,500. So, ato po silang i-divide sa months na 12 equals na atay weighted average outstanding share na 275,625. So, the next illustration is basic earnings or loss per share. Francine Corporation had 100,000 ordinary shares outstanding at December 31. We are required to compute for the Francine's basic earnings per share under the following independent scenarios, assuming the net income for the year was 2 million. There are no preference share issue. B, Francine issued 20,000 shares of 10%, 100 pesos par cumulative preference share. And C, Francine issued 20,000 shares of 10%, 100 pesos par, non-cumulative preference shares. Also, Francine declared dividends on the preference shares amounting to 300,000 during the year. Requirement number 2 is to compute the Francine's basic loss per share under the following independent scenarios, assuming the net loss during the year was 2 million. There are no preference share issued for the letter A. B, Francine issued 20,000 shares of 10%, 100 par pesos, and cumulative preference shares. Then lastly, for letter C, Francine issued 20,000 shares of 10%, 100 pesos par, and cumulative preference shares, and also Francine declared dividends on the preference shares amounting to 300,000 during the year. So actually, to get the basic earnings per share na nasa J formula, and we can get that by basic EPS is equal to net income or loss minus preference dividends over or divided by weighted average ordinary share outstanding. So, alita, requirement number 1. Sa requirement number 1, letter A, ang basic earnings per share para makuha na nato is 2 million minus, mauning atong i-minus ang loss or earnings, so 0, divided by 100,000. So, naatay earnings per share na 20 pesos. Sa letter B, basic earnings per share is equal to 2 million minus 20,000 times 10% times 100%. Then, after to divide just 100,000, so naatay 18 pesos per share. For the letter C, naatay 2 million. Ato na pong i-minus sa 300,000. ato na po siyang i-divide sa 100,000. So, naatay 17 pesos na earnings per share. For the requirement number 2, for the letter A, basic LPS, kani basic loss per share, basic earnings per share. So, 2 million minus 0 divided by 100,000 is equal to 20 per share. Ang basic LPS sa letter B is 2 million minus 20,000 times 10% times 100 divided by 100,000 is negative 22 per share. Then for the letter C, basic LPS is 2 million minus 300,000 divided by 100,000, we have 23 per share.
Good day everyone, I'm Katrina Sarmiento, and now I will discuss one by one the examples of potential ordinary shares. So what are the examples of potential ordinary shares? So first, we have convertible bonds payable. Second, we have convertible preference share. And third, we have options and warrants. So before we proceed, actually we have two scenarios here. So first scenario is the effect of potential ordinary share are dilutive. Then the second scenario is that their effect is actually anti-dilutive. So what's the difference between these two? So kung dilutive gani siya, ang effect sa potential ordinary share, say to it here that the basic earnings per share is actually higher than the dilutive earnings per share. Then kung anti-dilutive gani siya, ang basic earnings per share is actually lower or equal to diluted earnings per share. Then diluted earnings per share is calculated using the if converted method. The if converted method calculates what the effect would have been if the convertible preferred shares converted at the beginning of the period. So let's start with the convertible bonds payable. Convertible bonds are dilutive whenever interest or net of tax and other changes in income or expense per ordinary share obtainable on conversion is lesser than the basic earnings per share. So again, dilutive siya because the interest per ordinary share is lesser than the basic earnings per share. Then determination of diluted EPS. In case of bonds convertible into ordinary shares, diluted EPS shall be computed as follows. So, mao ni ang formula para ma-determine nato ang diluted EPS. So, net income plus interest expense, net of tax, divided by weighted average ordinary share outstanding. Then, upon conversion of the bonds, here's how we compute the weighted average shares. So, ato ra na si Jang Sondon. Then, months outstanding of convertible bonds payable is the start of accounting period or date of issuance, whichever is later, up to the reporting date. Then, if the bonds were converted during the year, the months outstanding for purposes of computation of the weighted average assumed ordinary shares issued as a result of the conversion of the bonds would be from the start of the year or date of issuance, whichever is later up to the reporting date. Then additional notes, for purposes of computing the basic EPS, the weighted average outstanding ordinary share is equal to the total weighted average of actual ordinary shares issued. Then for purposes of computing the diluted EPS, the weighted average outstanding ordinary share is equal to the total weighted average of outstanding ordinary shares. So now let's have an example problem for convertible bonds payable. At the beginning of the year, Mond Company has 100,000 outstanding ordinary shares. On April 1, Mond issued 10%, 1,000 convertible bonds for 3,756,920. The prevailing interest rate of the bonds is 12%. Interest is payable every April 1. The bonds are convertible into 20,000 ordinary shares. Net income for the year was 5 million. The net tax rate is 30%. Required compute for the basic earnings per share and diluted earnings per share. So first, we will compute for the basic earnings per share. So ato sa reviewon og balik og unsaon pagkuha sa basic earnings per share. So always remember that the basic earnings per share is equal to the net income minus preferred dividends divided by weighted average ordinary share outstanding. So dinhi naatay net income nga 5 million. So butang nato diri 5 million. Then minus nato sa preferred dividends. So since wa man tay preferred dividends, our calculation for the basic EPS is straightforward. So diretso na ta divide sa weighted average ordinary share nga 100,000. So 5 million divided by 100,000, then we'll get a basic EPS of 50 pesos per share. And now we will compute for the diluted earnings per share. And here's our formula. Diluted EPS is equal to net income minus preferred dividends plus convertible bonds interest times 1 minus tax rate, then divided by weighted average ordinary share. So our net income is 5 million, then minus preferred dividends. So since waman tayo preferred dividends, dito sa tag-add sa convertible bonds interest. So we have 3,756,920 times 12% ka interest rate, then times 9. So kaning 9 mo na itong months outstanding. So from April 1 to December, so mo nang 9. Then divide 12. Then multiply na to sa 1 minus tax rate nga 30%. Then divided by the weighted average ordinary share. So how do we get the weighted average ordinary share? So diara ang calculation para makuha na to ang weighted average ordinary share. So atong gi-add ang weighted average of actual ordinary shares nga 100,000 and then the weighted average of potential ordinary shares from assumed conversion nga 15,000. Then we'll get a total weighted average of ordinary shares nga 115,000. Then plugging in the figures, we'll get a diluted EPS of 45.54 pesos per share. And notice that the diluted EPS of 45.54 pesos is lower than the basic EPS of 50 pesos. And this confirms that the effect of the bond conversion is dilutive. Now let's proceed to convertible preference share. Convertible preference shares are dilutive whenever the amount of dividend on such shares declared in or accumulated for the current period per ordinary share obtainable on conversion is lesser than the basic earnings per share. Then determination of diluted EPS. In case of bonds convertible into ordinary shares, diluted earnings per share shall be computed as follows. So here's our formula. Diluted EPS is equal to net income before deducting preference dividends divided by weighted average ordinary share outstanding. Then upon conversion of preference shares, here's how we compute for the weighted average shares. So let's just follow this. Then months outstanding of preference shares is the start of the year or date of issuance, whichever is later, up to the reporting date. And if the bonds were converted during the year, the months outstanding for purposes of computation of the weighted average assumed ordinary shares issued as a result of the conversion of preference shares would be from the start of the year or date of issuance, whichever is later, up to the date of conversion. Now let's have an example illustration for convertible preference shares. At the start of the year, X-Men Company has 100,000 outstanding ordinary shares. On April 1, X-Men issued 10% of 4 million pesos, cumulative and convertible preference shares for 4,200,000. The preference shares are convertible into 20,000 ordinary shares. Net income for the year was 5 million. The income tax rate is 30%. Required compute for the basic and diluted earnings per share. So let's compute first for the basic EPS. And here's our formula. Basic EPS is equal to net income minus preferred dividends divided by weighted average ordinary share outstanding. So our net income is 5 million minus preferred dividends. So we have 4 million times 10%, then divided by the weighted average ordinary share outstanding, we have 100,000. Then plugging in the figures, we'll get a basic EPS of 46 pesos per share. Now let's compute for the diluted earnings per share. So here's our formula. Diluted EPS is equal to net income before deducting preference dividends divided by weighted average ordinary share outstanding. So our net income is still 5 million, then divided by the weighted average ordinary share outstanding. So unsaon man nato ni pagkuha ang 115,000. So dara ang calculation of the weighted average ordinary share. So atong gi-add ang weighted average of actual ordinary share nga 100,000. And then the weighted average of potential ordinary shares from assumed conversion, which is 15,000. Then atong i-add, then we'll get a total weighted average of ordinary share nga 115,000. Then plugging in the figures, we will get a diluted EPS of 43.48 pesos per share. And notice that the diluted EPS of 43.48 pesos per share is lower than the basic EPS of 46 pesos per share. So this confirms that the effect of the preferred stock conversion is dilutive. Now let's proceed to the third one, which is the options and warrants. Options and warrants have a dilutive effect only when the average market price of ordinary shares during the period exceeds the exercise price of the options or warrants. So diri sa options and warrants, lahi atong test ani natay duha ka buok na dapat i-compare. Kailangan nato i-compare ang market value of shares and ang exercise price. So if the market value of shares is higher than option price or exercise price, say to it that their effect is actually dilutive. So anti-dilutive siya if ang option price is mas dako or equal sa market value of shares. Then determination of diluted EPS. For the purpose of calculating diluted EPS, an entity shall assume the exercise of dilutive options and warrants of the entity. The assumed proceeds from this instrument shall be regarded as having been received from the issue of ordinary shares at the average market price of ordinary shares during the period. This is also known as treasury shares method. Then the difference between the number of ordinary shares issued and the number of ordinary shares that would have been issued at the average market price of ordinary shares during the period shall be treated as an issue of ordinary shares for no consideration. Now let's have an example illustration of these options and warrants. So Francisco has the following data for the year. Net income is 5 million. Outstanding shares January 1 is 100,000. Then employee share options outstanding during the year. Option shares is 20,000. Exercise price is 180. Fair value of each share option is 20. Average market price is 250 and ending market price at year end is 300. Then our requirement is requirement number 1, determine the amount of basic EPS for the year. Number 2, determine the amount of diluted EPS under each scenarios. A, options were issued on January 1 and there was no exercise of options during the year. And B, options were issued on April 1 and there was no exercise of options made during the year. And number 3, determine the amount of basic EPS and diluted EPS assuming options were issued in the previous year and were exercised on October 1 when the market price of the ordinary shares was 255 pesos. So let's compute first the requirement number 1. Determine the amount of basic EPS for the year. So remember the formula of our basic EPS, net income minus preferred dividends divided by weighted average ordinary share outstanding. So our calculation for the basic EPS is again straightforward because we have no preferred dividends, so diretso ta. So our net income is 5 million, then divided by weighted average ordinary share outstanding, nga 100,000. Then we'll get a basic EPS of 50 pesos per share. So now let's proceed to requirement number 2. Determine the amount of diluted EPS under each scenario. A, options were issued on January 1 and there was no exercise of options made during the year. So before ta makakompute sa diluted EPS, kailangan sa nato i-compute og una ang assumed treasury shares and incremental shares. So diara ang formula sa pagkuha sa assumed treasury shares og incremental shares. So this is how we compute for the assumed treasury shares. Our option shares is 20,000, then multiply by the total exercise price of 200. So 180 plus 20, we get 200. Then ato i-multiply ang duha, then we'll get a 4 million of proceeds from assumed exercise of options. Then ato i-divide sa average market price nga 250, then we'll get 16,000 assumed treasury shares. Then for incremental shares, atong i-minus ang option shares nga 20,000 minus na to sa assumed treasury shares nga 16,000. So our incremental shares is 4,000. So now we can solve for the diluted EPS, and here's our formula. Diluted EPS is equal to net income minus preference dividends divided by weighted average ordinary share outstanding. So again, our net income is 5 million. Then minus preference dividends. So since waman tay preference dividends dito sa taog, divide sa weighted average ordinary share outstanding. So giun sa manin nato pagkuha sa weighted average ordinary share outstanding. So here's our calculation for that. So weighted average of actual ordinary shares, we have 100,000. Then atong i-add sa weighted average of incremental shares from assumed exercise of options. So atong incremental shares is again 4,000 times 12. So kaning 12 mao ni ang atong month outstanding. So from January 1 to December, so mao nang 12. Then divide nato sa 12. Then plugging in the figures, we'll get 4,000. Then 100 plus 4,000 will get a total weighted average of ordinary share nga 104. So mao ni ang atong denominator, 104,000 shares. Then 5 million divided by 104,000 shares will get a diluted EPS of 48.8 pesos per share. Now let's move to requirement number 2B. Options were issued on April 1 and there was no exercise of options made during the year. So same process. Our net income is 5 million, then divided by weighted average ordinary share outstanding. So dara atong calculation sa weighted average ordinary share outstanding. So weighted average of actual shares is again 100,000, then add na to sa weighted average of incremental shares. So our incremental share is 4,000, then times months outstanding. So from April 1 to December, we get months outstanding of 9, then divided by 12. Then, plugging in the figures, we'll get 3,000. Then 100,000 plus 3,000 will get a total weighted average of ordinary shares nga 103,000. So 5 million divided by 103,000 will get a diluted EPS of 48.54 pesos per share. Now let's proceed to requirement number 3. Determine the amount of basic EPS and diluted EPS assuming options were issued in the previous year and were exercised on October 1 when the market price of the ordinary shares was 255 pesos. So here's our solution for requirement number 3. So let's compute the basic EPS first. So remember our formula for the basic EPS, we have net income minus preferred dividends divided by weighted average ordinary share. So our net income is 5 million, then minus preferred dividends. So since umantay preferred dividends, our calculation for the basic EPS is straightforward. So diretso taog divide sa weighted average ordinary shares. To get the weighted average ordinary shares, here's our computation. So weighted average of actual ordinary shares, we have 100,000. Then i-add na to sa weighted average of shares issued from exercise of option. So our option shares is 20,000 times months outstanding. We have 3 because from October 1 to December 31, so we'll get 3. Then divided by 12, then plugging in the figures, we'll get 5,000. So 100,000 plus 5,000 will get a total weighted average of ordinary shares nga 105,000. So 5 million divided by 105 will get a basic EPS of 47.62 pesos per share. Now let's compute for the diluted EPS. But first, ato sang i-compute ang assumed treasury shares and incremental shares. So to get the assumed treasury shares, atong option shares is 20,000. Then multiply nato sa total exercise price nga 200. So 180 plus 20 will get 200. 20,000 times 200 will get proceeds from assumed exercise of options nga 4 million. Then i-divide nato sa market price at the date of conversion nga 255. So 4 million divided by 255 will get total treasury shares of 15,686. Then to get the incremental shares, atong i-subtract ang option shares nga 20,000 and then the assumed treasury shares nga 15,686. Then we'll get incremental shares of 4,314. So now we can compute for the diluted EPS. So our net income is again 5 million, then divided by the weighted average ordinary shares. So to get the weighted average ordinary shares, dara atong calculation. Weighted average of actual ordinary share issued, we have 105,000. Then i-add na to sa weighted average of incremental shares from assumed exercise of options. So our incremental shares is 4,314 times months outstanding 9, which is from start of the year up to the exercise date, then divided by 12. So plugging in the figures, we'll get 3,235. So 105,000 plus 3,235 will get a total weighted average of ordinary shares nga 108,235. So 5 million divided by 108,325 shares will get a diluted EPS of 46.16 pesos per share.
Hello everyone, I am Megan Kang and I will be discussing Chapter 34 of Multiple Potential Dilutive Securities, Contingent Ordinary Share, Right Issues, and Purchased Option. So first, we have here the illustration of multiple potential dilutive securities. So, Francesca Corporation has the following data of the year. Net income from continuing operations of 1,500,000, net income from discontinued operations of 300,000, other comprehensive income of 600,000 with a total comprehensive income of 2,400,000. So furthermore, below is the list of securities issued by Francesca. Here we have the type of securities, par or face value, and specific descriptions and conversion terms. We have here ordinary shares with a par or face value of 100 pesos. Description is 100,000 shares and conversion terms is none. So 10% convertible preference shares with the par or face value of 100 pesos, 50,000 shares, and 2 shares of ordinary for each preference shares of conversion terms. Also, 10% convertible bonds of 1,000 pesos par or face value. Description is 1 million pesos, and conversion terms of 40 shares or ordinary for each 1,000 bond. Additional information. All securities had been issued in a previous period. The bonds payable are issued at face amount. Francesca had 10,000 shares options outstanding on January 1. The option has an exercise price and average market price of 150 pesos and 200 pesos respectively. The tax rate for the year is 30%. So the requirement here is to compute for the basic and diluted earnings per share from continuing operation and from discontinued operations. We have here solution number 1 for the first requirement, which is from continuing operations. The basic earnings per share, here we have the formula. 1,500,000 pesos subtracted by 50,000 times 100 pesos times 10% divided by 100,000. Basic earnings per share is equal to 10 pesos per share. Diluted earnings per share, first step is to check for initial test of dilutions. We have here option dilutive. The exercise price is 150 pesos is less than the average market price, which is 200 pesos specified here. And convertible preference shares, probably dilutive. The incremental earnings per share is 5 pesos and it is less than the basic earnings per share, which is 10 pesos. The incremental earnings per share is equal to 5 million times 10% divided by 50,000 multiplied by 2. So the incremental earnings per share is equal to 5 pesos per share. Third is the convertible bonds, probably dilutive. The incremental earnings per share is 1.75 pesos and is less than the basic earnings per share, which is 10 pesos. So incremental earnings per share is equal to 1 million times 10% times 1 minus 30% divided by 1 million divided by 1,000 times 40. So the incremental earnings per share is equal to 1.75 pesos per share. Second is the rank the dilutive potential diluters from the most dilutive to the least dilutive. So first is the option, second is convertible bonds, specifically incremental earnings per share of 1.75 pesos per share. Third is convertible preference share, incremental earnings per share of 5 pesos. Third is include potentially dilutive convertible securities one by one. Every time an item is included, calculate new earnings per share or new loss per share amount as follows. So we have here that the table. Kanang dili gi-show ang unsaon pagkuha sa earnings per share for each operations. Here we have the continued operations, the convertible bonds payable, and convertible preference. So the net income less preference dividends is 1.5 million is equal to 50,000 times 100 pesos times 10%. So the answer is the final diluted. The answer for requirement number 1 is earnings per share would be 6.67 pesos per share. So we have here the requirement number 2 from discontinued operations. Kanang it's mas dali ra ni sa jawan na sa specify og yun sa ang kuan sa book. So basic earnings per share is equal to 300,000 pesos divided by 100 is equal to 3 pesos per share. Then diluted earnings per share is 300,000 divided by 242,500. So ang diluted earnings per share is equal to 1.24 pesos per share. So important note, the weighted average outstanding shares should be the denominator in the computation of the final diluted per share from income from continuing operations from 242,500. So next is the right issue. So that the issue of ordinary shares at the time of exercise or conversion of potential ordinary shares does not usually give rise to the bonus element. This is because the potential ordinary shares are usually issued for fair value, resulting in a proportionate change in the resource available to the entity. In the rights issue, however, the exercise price is often less than the fair value of the shares. Therefore, such a rights issue includes a bonus element, which will later have an effect to earnings per share computation. So we have here the illustration of rights issue. Example problem, the adjusted net income of RFB company for the years 2020, 2021, and 2022 amounted to 1,008,000 pesos, 1,237,500 pesos, and 1,750,000 respectively. Additional information. Ordinary shares outstanding prior to right issue is 20,000. Rights issued during 2020, 1 new ordinary share for every 4 shares held, 5,000. And date for exercise of rights, fair value of share immediately prior to exercise of rights, fair value of share rights on is 120 pesos. And exercise or subscription price is 20 pesos. So the requirement is to determine the basic earnings per share for years 2020, 2021, and 2022. So we have here the solution. So step 1 is to compute for theoretical market value of share X right. So fair value of ordinary share outstanding is 20,000 times 120 pesos, which is the total of 2,400,000. Additional proceeds from exercise of rights, which came from 5,000 times 20 pesos and is equal to 100,000. So the total is 2,500,000. Divided by outstanding shares after rights issues, we have theoretical X rights fair value per share of 100 pesos, or we can use this one. Fair value per share right on is 120 less theoretical value of one right, which is less than 20. The total will be the theoretical X rights fair value per share is 100 pesos. So mas dali gadyo ni siya ang ikaduhang computation. So value of one right is equal to 120 minus 20 pesos over 4 minus 1 is equal to 20. Step 2 is to compute for the adjustment factor. So adjustment factor is 120 divided by 100, that will be 1.20. And then step 3 is to determine the weighted average outstanding shares and basic earnings per share of 2020, that is weighted average outstanding shares of 20,000 times 1.20 times 12 over 12, that will be 24,000. So basic earnings per share is 1,088,000 pesos divided by 24,000, that will be 42 pesos per share. And then in 2021, weighted average outstanding shares is 20,000 times 1.20 times 3 over 12, that will be 6,000. And then 20,000 plus 5,000 times 9 over 12 is 18,750. And then imura nang i-add, that will be 24,750. And basic earnings per share, 1,237,500 pesos divided by 24,750, that will be 50 pesos per share. And then in 2022, weighted average outstanding shares of 20,000 plus 5,000 times 12 divided by 2 is equal to 25,000. Then basic earnings per share of 1,750,000 and divided by 25,000, that will be 70 pesos per share in 2022. Next is the contingent ordinary shares for basic earnings per share. So the contingently issuable shares are treated as outstanding and are included in the calculation of basic earnings per share only from the date when all necessary conditions are satisfied. For example, the events have occurred. So notes, shares that are issuable solely after the passage of time are not contingently issuable shares because the passage of time is a certainty. And second is outstanding ordinary shares that are contingently returnable are not treated as outstanding and are excluded from the calculation of basic earnings per share until the date the shares are no longer subject to recall. Next is the written put options. We have a sample illustration. Assume that an entity has outstanding 120 written put options on its ordinary shares with an exercise price of 30 pesos and the average market price of its ordinary shares for the period is 28 pesos. So the requirement here is to determine the number of incremental shares as a result of the written put options that should be included in determining diluted earnings per share. So solution, incremental shares is equal to 35 pesos minus 28 pesos times 120 over 28 is equal to 30 shares. So purchase options, next is the purchase options. So contracts such as purchase put options and purchase call options are not included in the calculation of diluted earnings per share because these are considered anti-dilutive. So we have here the formula of earnings per share for participating preference shares. So basic earnings per share for preference shareholders equal to total dividends to preference shares divided by the outstanding preference shares. And basic earnings per share for ordinary shareholders, net income subtracted by preference shares dividends divided by the outstanding ordinary shares. And that's all. Thank you.
Chapter 35, Substantive Test of Income Statement Account. So in this chapter, we delve into the substantive testing of income statement accounts, a crucial aspect of the audit process aimed at ensuring the accuracy and completeness of reported financial results. Introduction. The level of earnings of an entity is often given a great emphasis as an indicator of the financial performance of an entity. The statement of comprehensive income is the fundamental stakeholders of the entity. The SCI also shows the stewardship of the management and how well they manage the resources provided by the investors and lenders. So, the primary purpose of substantive testing is to obtain audit evidence regarding the assertions made by the management in the financial statements. And to ensure the reliability of the financial statements, auditors should focus on the three main assertions. So, here are the three main assertions: the occurrence, completeness, and accuracy. Occurrence means to prevent the overstatement of revenues, while the completeness is to avoid understatement of costs and expenses, and accuracy is ensuring proper measurement of the income and expenses. So, in substantive testing, there are some procedures designed to verify the occurrence, completeness, accuracy, and valuation of income statements, and these procedures are included: number 1, performing overall analytical review for significant SCI account means performing overall analytical review for a significant account. This involves analyzing the financial data of significant SCI accounts to identify any unusual trends, anomalies, or discrepancies that may require further investigation. Number 2 means this entails reviewing the company's policies and procedures for recognizing revenue to ensure compliance with accounting standards and accurately reflecting the company's financial performance. Number 3, this involves examining any miscellaneous income and expenses to ensure they are properly categorized and recorded in the financial statements. 4. In this step, verifies the accuracy and completeness of interest, dividend, and investment income reported in the financial statements by reconciling them with supporting documents such as bank statements and investment records. 5 is here is the auditors perform tests to verify the accuracy and validity of other expenses and income transactions beyond those significant measure, ensuring they are properly recorded and classified. 6. This also involves testing the timing of income and expenses recognition to ensure transactions are recorded in the correct accounting period, preventing misstatement of financial results. And last, number 7, this step involves a thorough review of miscellaneous income and expenses to ensure they are accurately recorded and appropriately categorized in the financial statements. It may also involve scrutinizing individual transactions for accuracy and completeness. So, overall, substantive testing of income statement accounts plays a critical role in providing assurance to stakeholders regarding the reliability and integrity of financial information represented in the company's financial statements. Through careful planning, execution, and documentation, auditors contribute to the credibility and trustworthiness of the audit process. Next is the review recognition procedures. So, the auditor should evaluate accounting policies used by the company in recognizing and measuring its revenues in compliance with relevant PFRS. The auditor then will select items for testing to determine if ang revenue is na-record ba based on accounting policies adopted. Next is review contents of miscellaneous income and expenses. So miscellaneous income and expenses by their nature are measures of minor items. And in auditing of miscellaneous items, the auditor should understand the content of account, obtain and analyze a breakdown of account from the client, check the appropriateness of classification of the items included in the account, and investigate any significant unusual transaction, if not already covered by balance sheet testing. Test of interest and dividend income. The auditor should test interest, dividend, and investment income for significant investments by comparing interest and dividend income with the prior period and obtaining explanations for any significant unexpected variations. 2. Performing a reasonableness check on interest income by multiplying the average balance of the investment in the period by the average interest rate received. 3. Agreeing dividend income to the dividend statement published record of by dividends paid and or bank statement, and testing accrued interest and interest earned during the period on receivables. Then determining input interest by preparing an amortization table, verifying the investment income from the associate audited financial statement, and determining the adequacy of disclosure in accordance with the relevant of the PFRS. Next is the test of details on other expense and income transaction. After defining the population, the auditor will select samples and obtain supporting documentation. So, a test of details on other expense and income transaction involves examining individual transactions within these categories to ensure the accuracy and legitimacy. This process also typically includes verifying supporting documentation such as invoices or contracts and scrutinizing the recording of this transaction in the financial records. The aim is to detect any errors, misstatement of or fraudulent activities that may impact the accuracy of the financial statements. Then the test cut-off of income and expenses. The auditor should make an audit sample of recorded income and expense before and after the reporting date. The test of cut-off for income and expense accounts involves examining transactions near the end of the reporting period to ensure they are recorded in the correct accounting period by conducting a test of cut-off for income and expense accounts. Auditors aim to provide assurance on the occurrence, completeness, and accuracy of transaction recorded in the financial statement for a specific reporting period. That's all.